We're in a different world now. We're not in the normal bull market of 80 or 2011 gold and silver. The events that are going on around the world in terms of markets, economics, monetary stuff, and now something we'd predicted months ago before Trump was even elected. We said if he were elected, it would be, at some point, it would be uncopacetic in the streets. Not that it was uncopacetic to have that outcome. It was just that what would happen would be perceived as disturbing ultimately, and it would show itself in the streets. And I think that's just begun, but that's not a causal factor. That's just an echo effect. Big things are happening in some big markets that will further impact what the monetary metals are doing, meaning go up, but then suddenly go up more and more accelerated. And that is, there's two markets in particular we're watching. And one, I think the stock market's topping. Okay, we thought that back in late last year, and I say the same thing now. Do not trust it. If it makes a new high, don't believe it. The price action since May of last year, if one pumps up a price chart, go back to May of last year, you see silver hit 32.70. You just draw a line sideways through a year of action. We got up to 35 twice after seeing that 32.70, but basically we oscillated in wild swings either side of that 32.70 level. And in early April, we had a plunge that cleaned out anybody who was weak. They screamed and ran. Okay, got down to 27.50 in 2.5 days, from 35 to 27.50. And within a few days, you're back up in the 30s again. Okay, so that shouldn't have happened, obviously. It was a bear trap, as we said it was. But when you look at price, there's this erratic behavior, and it took like getting up well over 35.5 to take out those two prior highs. But when you looked at momentum of price, we had a perfectly downtrending channel that you could, if it were a price chart, people would say, oh, that's a nice channel. If you break out of the top of it, you're running. That breakout occurred at 34.90 a week ago. And boom, 37, okay? Last few days, we've cooled off, but not really pulled back. If you look at the closes, it's just okay. That is a major breakout for silver. It says to us that the congestion of the last year is over. We're again resuming upside.
Silver has spent the past year locked in turbulence. After hitting $32.70 in May, prices ricocheted wildly, plunging to $27.50 in April before surging back above $35. The recent breakout past $34.90 marks the end of this congestion. Momentum confirms a shift. Silver is now staging a breakout that analysts believe could spark a powerful rally toward $60-70.
For a variety of reasons, I won't go into all of them, okay? I think silver in the next 3 to 5 months is likely to be up in the $60 to $70 range. In other words, the $50 highs were phantom anyway, because when we got up there in 1980 and 2011, it was like for a brief few days or a few hours even. So it really wasn't a reality. It was just whoosh, boom, and then down. Those old highs don't mean much. To some people, they do, because they go, oh, you make an all-time new high, big deal. But in real dollar terms, those are meaningless. If we match the real dollar valuation highs of 1980 or 2011, it'd be probably $100 silver, okay, because of the decay in the money supply and what the dollar means now versus what it did then. But anyway, right now, I think that we're about to go into a surge that lasts 3 to 5 months, and this is not the final surge. And don't make a mistake about that. This is a surge that gets us up out of here into a new reality. And I think it's likely to carry us well beyond the 50 into the 60-70 range. I can't be more precise than that right now. And I think it's going to occur in the next 3 to 5 months. And that won't be the top, but that's going to be your next major step. And I think it's going to turn a lot of heads. Like, what? How come I missed that? Why? Because you got out every time silver flinched in the last few years, you got out, and that was a mistake, something we tried to keep our subscribers from doing. Anyway, I think this is going to be something very jolting between now and this fall, later in the fourth quarter sometime.
While silver gains strength, the U.S. dollar quietly unravels. The dollar index broke critical support levels this spring, slipping below 98.35, a key momentum threshold it sustained. This signals a broken monetary backbone. Foreign investors, heavily exposed to U.S. bonds and stocks, now face compounded losses as trust in fiat currencies erodes. Silver's role as a monetary safe haven gains urgency.
I've been arguing this for a while, and I probably have on your show as well. We're in a different world now. We're not in the normal bull market of 80 or 2011 gold and silver. The events that are going on around the world in terms of markets, economics, monetary stuff, and now something we'd predicted months ago before Trump was even elected. We said if he were elected, it would be, at some point, it would be uncopacetic in the streets. Not that it, it was uncopacetic to have that outcome. It was just that what would happen would be perceived as, disturbing ultimately, and it would show itself in the streets. And I think that's just begun, but that's not a causal factor. That's just an echo effect. Big things are happening in some big markets that will further impact what the monetary metals are doing, meaning go up, but then suddenly go up more and more accelerated. And that is, there's two markets in particular we're watching. And one, I think the stock market's topping. Okay, we thought that back in late last year, and I say the same thing now. Do not trust it. If it makes a new high, don't believe it. First off, if you look within the stock market, you'll notice that your leadership is gone. NVIDIA is still up there, and it hasn't even made a new high, and Microsoft. But you go through the other big seven, and suddenly, what's going on here? I'm where I was in 2022. The leadership is fragmented. And too many sectors aren't participating in this. Too many key sectors aren't back at their highs. So don't trust it. Momentum says you made a big stumble in the first quarter of this year that can't be shrugged off. Whereas you could try to rally and even maybe make a teasing new high, maybe. The major momentum trend is now negative. Okay, now, but more important than that, the dollar. When you measure the dollar versus the euro or the yen, they're two pieces of fiat stuff, who cares? But that's what we measure when you look at the dollar index. And the dollar index made a high in 2022 up at 115. But then in 2023, it collapsed down to 100, okay? And then for 2 years, the dollar index went between 100 basically and 108, just up and down and up into 2 full years of nothing, where it really wasn't creating any waves or consequences. It was just Dallsville. A lot of volatility elsewhere, but not in that market.
The $50 silver spikes in 1980 and 2011 were fleeting, not grounded in real dollar value. Adjusted for inflation and monetary debasement, silver's true high is closer to $100. Today's conditions are fundamentally different. This isn't a bubble, but a foundational revaluation. As the Fed's credibility wanes, real assets like silver offer long-term preservation of purchasing power amid currency degradation.
In March of this year, we dropped down from the upper end of the range that it had been in down to 104 area. We turned major bearish at that point, saying, okay, major bear trend is going to unfold now, not just congestion. It's going to wake up to the downside. Since then, we've dropped down into the 99, 98 area. A month or so ago, had a rally back to 101. Right now, we're back under 98 again. We broke enough stuff in March at our 104 level to say, okay, it's underway. We've got one final number that is so negative if you close below it that it says Bombay door opens, okay? And that's closing out any month this year below 98.35 to give you the precise number. Right now we're 97.90, okay? 2 weeks to go. You close below that number this month and 10-year average momentum says you've broken your backbone, not your legs and your arms. You've broken your backbone, and you're going down probably swiftly. I wouldn't be shocked by a 10, 20 more point more drop pretty quickly. That will cause disturbances and wave effects in other markets, particularly foreign money that owns bonds, government bonds, or foreign money which has never more been so important in the U.S. stock market. Never before have we had such a major foreign buying of the stock market in the U.S. than the last couple of years. Not only is price sensitive to what happens in those markets, but also to the dollar. Because if you own T-bonds in dollars and the dollar drops 10%, whoa, you're not only getting hurt in the T-bonds, but you get hurt in the conversion. Same true with the S&P, for example. So I think that dollar breakage is going to have some wave effects that it hasn't had for the last 2 years because it's been fairly dormant. And that's an area that not many people are talking about because they don't know that getting to where it is now is really that important. It is. And I find it very interesting that the dollar is doing what it's doing at the same point in time that silver's resurrecting itself. It's too coincidental. Maybe it's not coincidental. Maybe it is that you're going to have fractures appearing in different markets at the same time.
Silver has historically lagged gold, but that's changing. Its relative strength is improving, up from under 1% of gold's price to 1.1%. Meanwhile, gold miners, often seen as leveraged bets on gold, are showing early signs of a breakout. Since 2015, miners like GDX have outperformed gold itself. A synchronized surge in metals and miners may be underway, and it could jolt markets awake.
And other currencies really aren't the alternative either. We know that because what we debate on the dollar index is merely the relative degradation of one versus the other. They're all degrading in real value because, they pump up the money supply, increase the quantity of money, therefore you reduce its actual underlying buying power. Like, your granddad, when he built a home, was $4,000. Now it's $40,000 is the median price. Okay. What's going on? Well, it's the degradation in the money in it. The same is true with a lot of assets, stock market as well. It's not even keeping up with the degradation in the money in it. Stock market isn't. The S&P isn't. It looks great on a chart. We ran a chart in a report a week ago just for fun. The Venezuelan stock market. Okay, talk about degrading your money. We know that. We know they pump. It's paper. It's like the Weimar Republic. Okay, that stock market's just blowing off the page. I mean, you say, "Gee, I should be in that market." Yeah, you probably it buys fewer loaves of bread now than it did 3 years ago. Okay, even though it's going off it's meaningless. In other words, so sometimes when people focus on just the nominal price of something, they're missing the point. It's degrading in real value, whereas monetary metals over time hold their value. And I think there's a re-realization of that now among a lot of investors that, gold's been doing well, not just nominally, but it's been holding its real buying power. And silver's lagged. We know that. When we study the relative performance of silver to gold, we know it's at very, very low historical levels. Okay, it was under 1%. In other words, a lot of people do it the other way. We just divide an ounce of silver into gold, express the answer is a percent. Silver getting down to under 1% of the price of an ounce of gold is very low historically. You can go back and find instances of it. And by the way, whenever you did, you want to be a buyer of silver then, okay? It's now up to 1.1%. So it's gained, some in the last month or two. It's starting to reassert itself. Same is true with the gold miners. The gold miners, on a relative basis to gold, have been basing and actually firming up over since 2015. The bear low in all the metals, they've appreciated actually a bit more than gold. It's hard to believe when you look at a chart because it looks so irregular, but actually, if you'd bought GDX in December 2015, you're doing better than if you bought an ounce of gold. Okay, but they look like they're ready to now accelerate their resurrection. They're coming out of this vastly cheap hole on a relative basis to gold, and similar silver relative to gold. So not only is silver broken out of a momentum situation that says it's about to shoot up in a more dramatic way, but its spread relation to gold and the miners' spread relation to gold says the same thing. It says, we're waking up, we could jolt you in what we do over the next handful of months in terms of, wow, I wish I hadn't gotten out of my miners. Okay, I think that's where we are right now.
This is not just another rally. The dynamics have fundamentally shifted. Currencies are faltering, inflation pressures persist, and central bank credibility is cracking. Silver is no longer asleep. If history teaches us anything, it's that when silver awakens, it doesn't walk, it runs. Make sure you're not caught off guard. If you found this analysis helpful, don't forget to like, comment, and subscribe for more in-depth breakdowns of gold, silver, and market trends that matter. Stay informed, stay ahead.